Hello, everybody. It's 11:15, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating this session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Jumping right in here, we just had the quarterly stocks release for September. Real quickly, the numbers for wheat, 1.986 billion bushels, corn, 1.760, and soybeans came in at 342. Looking at a couple of wheat numbers, all wheat was 1.985 and all winter wheat 1.35. And I know we'll talk about a little bit about that as we go through here. Dustin, I guess give us a few initial thoughts as we've looked at the report here, and then we'll throw it around the room for some other thoughts.
Yeah, so definitely a friendlier stocks report number. We came out, with that 176 for corn. So certainly a lot less on farm than they were probably expecting. I think we were 780 million bushels on farm versus 605 last year. And, corn's responding. We're seeing spread tightening. D's corn back up to 426, new high move here for we haven't seen in a while. It kind of flies in the face of what was happening in the East rate during, that, end of August timeframe when we did get September to December, basically at full carry at one point in time. And we saw a lot of cash carries along the river. River levels were low, granted, but, we were full in a lot of those locations. So haven't really dug into like exactly where the stocks change was, the surprising of state by state basis yet. But certainly overall, it puts a lot tighter approach onto the 2024 balance sheet. If we were to come through and find out that we only had a 180 yield in, let's say, in January, that would actually tighten things up quite a bit at the current demand that we've had. So it's definitely it's definitely positive. I don't know if it's going to get any legs beyond that though. If we come in with a 183 like we're still expecting, there's still plenty of supply to meet that demand.
That's a good point. And I think it's, you look at December corn and, we're high at 426 here post report. That's some really key technical area. If we go try to maybe close above that or up in that level here today, would be pretty significant for the short term, wouldn't it, guys?
Yeah, I would say, you also have to think about all the things that have happened since then too. Like we did see a pretty good sized dump of old crop corn right there at the end of August, where basis only contracts, DP all had to be dumped. Does that make a grower a little bit less of a more reluctant seller rather when they see markets starting to rise again? It's like, oh, I had to sell the low, let me go buy that back somehow. Market sentiment might, be partly why we're rallying here, is that like we feel like a lot was given up in exchange too cheap, and now they're going to try to make up for it from a higher price. So to see it go into like the 440s would be awesome, right? To have that ability to sell that price again. But I just wouldn't be that surprised, I guess, with that type of a stocks number. You start to look at how dry we're finishing out in the West, how quickly we're gonna see harvest ramp up. We get to that last part of harvest and things start to get locked away again. Might not be out of reach to get to a 440 price point again. We test through some of these levels.
Hey, Justin, a couple thoughts?
Yeah, just devil's advocate here. I'm kind of more concerned about the second half of harvest, to be honest with you. Yields are coming in good. Yeah, stocks are 80 million bushels, less than the guess, but we still have plenty. To Dustin's point, if yields come in surprisingly low, we haven't, I don't think, gotten enough evidence that would be something I would plan on. We've had over a 40-cent rally with big yields. We have crop insurance that's expiring the month of October, which has been a lot of people's backstop for marketing. So, I'd be concerned, after, say the next couple of weeks, like, back half of October, 30 to 45 days ago, I think the biggest surprise would have been a rally. Now we've had a rally, and I think the biggest surprise now would be a break back towards the lows. Just with the attitude of, things are bullish. Thank goodness that bearishness is behind us. Part of, Dustin's point about sentiment, I agree. It's, kind of more of a bullish or, fear of missing out on the upside is kind of coming back after such a dismal landscape 30 days ago. So I just want to be kind of cognizant of, how the mentality changes so much in these markets. Not to lose sight of like, these are the areas that we were hoping we would get back to. And so we're there. So I personally think it's a great opportunity, especially for growers that are getting really big yields. Like revenues have increased dramatically. For the highest price, you've only had one day to sell this price since July 1st. So don't want to lose sight of all those things. And, these are the kind of mentality shifts that you need to get to these price levels. You don't have a rally without people getting bullish on things. So just kind of trying to, keep all that in mind.
Sure.
Yeah. This is definitely the price zone that we talked about. It would be awesome to see again, was like that 420 to 432. We're looking at that 100-day moving average. We're right in the middle of that right now. So if you've been waiting to catch up on just downside coverage, it doesn't have to be as aggressive as just selling it all. It could even be just a put floor. Like Justin said, like last half of harvest, if we do end up at that 183 and above yield, this is a gift of a price compared to where we just were. So we don't want to lose sight of that. I agree.
Yeah. And you just can't, now you actually know your yields. You have a pretty good idea. So now you can't, if it were a break back down, you, for lack of a better term, don't have the excuse, right? It's a hard in May when May or June at those prices to sell a whole bunch when you don't know what the crop's going to be. But, don't want to make this. I know a lot of producers made the mistake last year, had record-y type yields last year and didn't sell it because it was too cheap. And then we broke another $1. So just don't want to make those kind of mistakes when, things look so bad only 30 plus days ago. So.
Sure. Ben, a couple thoughts here as you looked at it.
Yeah, I think that, they'll definitely put a little more scrutiny. I think people were disappointed with no material reduction in the September yield. So I think there will be a lot of excitement to see if we get a little bit more of a tailwind with potentially a lower yield from a poor finish. So I think that's on the radar. But to, kind of jumping on Justin's bandwagon for a second, this is back up to those levels that we thought would be really nice to see. Option volatility is very cheap. It's not a recommendation for anyone, but just looking forward and having had some things in my life trading that you look back on, you don't want to do is we use that October crop insurance is gone. You haven't done anything. It can make for a pretty miserable November and December if we were to roll over and break like last year. And March puts are pretty cheap. Certainly do what works best for you, but that's going to cover you for the next WASDE. It's going to cover you past the crop insurance. It's going to extend that floor. It's going to get you the January report and the beginning of price discovery for new crop. So, risk management is not about picking the high. It's about keeping yourself out of trouble. So I think that's just a good line of advice there.
Yeah. And like to that point, Ben, like the vast majority of growers are going to have 2 years of crop risk. Yep. Between end of October and March, right? Because a lot of people are buying inputs, doing loan renewals. Like there's a tremendous amount of risk in that time frame that a majority of growers are uncovered.
Yep. And and we very well could be seeing that kind of shift with lower interest rates, and we see all this stimulus in China. Maybe we are gonna rally 40, 50, 60 cents. Who knows? Whatever that number is. Maybe we don't. But if we do, you're not going to miss the 10 to 12 cents as much on the put, as much as you will if we turn around and crazy Ivan this thing after crop insurance goes off, and all of a sudden we're back at 380 because we had a really good crop and we're not having any sales. So I think it's a really good day to have a conversation about what risk management is when you get to these levels, and remind, I think once that crop insurance floor goes, that's when the tide goes out. So.
Yeah, there's stuff to do here. That's the exciting part, right?
Yep.
Whether you're bearish or bullish, at least there's some opportunity here. So this is good news for everybody.
Absolutely. Any parting shots here, guys? We're pretty good here. We'll see how we close here today. We'll continue to dissect this thing and certainly visit about it tomorrow morning, 8:15 on our war room. I know we'll get harvest numbers here this afternoon, see what kind of pace we're making harvest wise. Should be pretty good in the upper Midwest. We've got a nice window of weather So we should be rocking and rolling. But anyway, without any other parting shots, we'll sign off here. Appreciate everybody tuning in to the bonus War Room edition here today. We appreciate on a daily basis all of our subscribers that tune in and watch our show. If you enjoy, all the content and everything we put on, give us a like or subscribe. Doesn't cost you anything to do so. And it certainly helps us with all those YouTube algorithms. So thank you very much to all those that tune in. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here today, guys. It was a good conversation. We look forward to talking to everybody again tomorrow morning.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.